For sure. Okay, there we go.
Wonderful. Well, thanks so much for inviting us again. I think this is the third year we've done a presentation on kind of the intersection of tax issues with migrant farm workers and education issues. So we're really excited to be here again. Today, I have my wonderful student, John Ficklin, who is a student that's helping us in the tax clinic, and he helped prepare these slides with two other students who couldn't be here today. But so we're going to talk about the new rules around the advanced child tax credit and certain issues as that plays out with ITINs and people who don't have social security numbers. So let's get started. Go ahead, John.
Thanks, Sarah. Can you flip the slide?
Sure.
Yeah, so just some background on who we are. Our clinic is a need-based legal clinic. We represent clients in federal tax matters. We specialize in client controversies with the IRS. So basically, anytime you're growing up in an adversarial proceeding against the IRS, we can help. Myself and my colleagues are student interns. We represent clients in the clinic with both the IRS and the Oregon Department of Revenue, so both federal and state taxes. And like I said, those controversies range from audits, appeals, trials, and hearings. Why we're here, sorry.
Yeah. I was just going to add on to that, that if you have clients or if you have parents that come to you with a tax issue, a letter from the IRS, a letter from the Department of Revenue, feel free to send them our way. We'll have our contact information on the last slide.
Our main goal of this presentation is to raise awareness for taxpayers with children that may qualify for the tax credit, primarily because we want you to get your money that you deserve from the government.
So we're going to talk about the child tax credit, and the child tax credit is actually three types of credits. So not only does the child tax credit reduce the total amount of tax you owe, but it's also refundable, which means that if you don't owe as much as you would get under the child tax credit, the IRS will send you what's called a refund of the additional amount of the child tax credit that didn't reduce your tax down, if that makes sense. So let's say your child tax credit is $1,000, but you don't owe any taxes. Your federal tax liability is $0. You would get the $1,000 in the amount in a check or direct deposit, or I guess they're sending out debit cards as well. The child tax credit through this year, 2021, is also an advanced payment. What this means is that normally you have to wait until tax season to get your refund or your credits on a tax return. But in this case, you can sign up to receive the child tax credit that you would receive in 2022, starting in July of this year. So if you filed a 2019 return or a 2020 return, you should, and you qualify for the child tax credit, you should have started receiving those payments starting in July. And feel free to interrupt with any questions. If you have questions along the way, this is supposed to be more of a conversation, so feel free to interrupt and let us know if you have any questions. So child tax credit is unique in that it has these three types of credits. Not only does it reduce the amount of tax you owe, you get money back from the government, and this year you get money in advance of tax season.
So some background on the child tax credit. It originally came about in 1997. Originally it served as a $500 per child non-refundable credit. So it wasn't a cash refund, it was just a reduction in the total amount of taxes you had to pay. And the primary purpose when it was passed was to provide tax relief to middle and upper middle income families. However, with the advent of COVID, Congress passed the American Rescue Plan of 2021, and that modified the credit quite a bit. For 2020 returns filed this year, as Sarah was saying, the child tax credit is going to be worth $2,000 per child under the age of 17, so long as they're claimed as a dependent and with a qualified social, or the child has a qualified social security number. However, the American Rescue Plan expanded the child tax credit for 2021 in a few very significant ways. Now 17-year-old dependents now qualify, so it's dependents under 18, whereas it used to be dependents under 17. The total amount for the credit is increased to $3,000 per child and $3,600 per child for children under the age of 6. The $2,500 earnings floor is removed, which is also super important. Like Sarah was saying, for 2021, even if you have no income, you would still be eligible for this credit. And like Sarah said, the credit is fully refundable, and half of it can be received in advance via periodic payments from the IRS through July 2021 to December 2021.
Quick interruption. I noticed that there's a question in the chat that says, what if the person didn't file taxes for 2020?
Well, so if they didn't file taxes for 2020, it would be based on the tax return for 2019. However, there's still time to file a 2020 return. The portals are open still, so there is a non-filer portal if you don't normally file a tax return. That's on the IRS website and the White House website. That is supposed to be open until November 15th. We've found that in the past, the date comes, like they say, oh, there's a deadline, hurry, get your return done by November 15th, and they'll extend it. I mean, obviously we want to be mindful November 15th is a deadline, but don't be surprised if they do extend it past November 15th. So yeah, you can still file your 2020 return, and that would qualify you to receive the advanced child tax credit. If you miss the advanced child tax credit deadline, so let's say November 15th comes around, you didn't file your 2020 tax return, you can wait until the 2021 tax filing season, which would be normally tax filing season is from January or February through April 15th normally. You can file a 2021 tax return and claim the child tax credit for that period. Now, you wouldn't get it in the form of advance payments, but you would get the full amount in 2021. So it's a little tricky how they've set up these. It's kind of like how they did the stimulus check. It's like you have to file a 2020 return to apply for the advanced child tax credit, which is really a credit on your 2021 return. So if you didn't get it because you didn't file a 2020 return, you can still claim the credit on a 2021 return. That was a really long-winded answer to say that yes, you can still file a 2020 return, and if you don't file that, you can get it through a 2021 return. And we'll repeat these themes throughout this presentation.
Yes,
I have a-
go
go
ahead.
ahead.
I have a question. What if the person that didn't have any income?
There is no income requirement. That is a really important point for this. For 2021, there is no income requirement. The person did not have to earn a single dollar and they would still qualify for this credit.
But do they still have to file a tax form and state that they had zero income?
Yes, they do. That is how you get this credit, is you file a tax return. It makes no sense. Nobody understands why the IRS is doing this the way they're doing it. But yes, they have to file a tax return, which is ridiculous because they didn't have any income. But yes, that's how you get the child tax credit. I can't explain it. I just tell you the rules of what you have to do. But yes, you have to file a tax return.
Thank you.
You're welcome. So did we finish this slide?
Yeah, can we go to the next one?
Okay, so this is where we get into kind of a little bit with our immigrant taxpayers who don't have social security numbers, or even immigrant people who don't work, have no income whatsoever, but they have children that have social security numbers, they qualify for this credit. So an ITIN holder does not have a social security number, does not have status, is an undocumented immigrant, but has a citizen child or even a DACA child or child with a valid social security number, they're entitled to this child tax credit. So like Rosa just pointed out, they have to file a tax return. How do you file a tax return if you don't have a social security number? You file for, you apply for what's called an individual taxpayer identification number, which allows people that don't have social security numbers to file a tax return in order to obtain the credit. So child must have a valid social security number. There's no way around that. The rules did change prior to, I want to say 2017. That was not the rule. As long as you lived in the United States for more than half the year and you didn't, nobody had to have a social security number. Everybody could get the child tax credit. But past, I think it was the PATH Act that changed that and required children to have social security numbers. So as you may or may not know, for the earned income tax credit, basically everybody in the family needs a social security number. Taxpayer, spouse, and child all need social security numbers. But for the child tax credit, only the child needs the social security number. So there's a lot of families out there that, as Rosa pointed out, that are going to be filing tax returns for the very first time. They've never earned money in the, they've never earned $1, and if they have children that have social security numbers, they're entitled to this credit and will need to be filing a tax return. If they don't have a social security number, that means that they're going to have to be getting an ITIN number as well. And there's no work requirement. So this is an area where it's just kind of mind-blowing for a lot of people. It's like, oh, I have to file a tax return. Okay. So we're trying to give you guys the kind of the resources to figure out how we can advise our families about that. Go ahead, John.
Yeah, so we wanted to spend some time talking about the benefits of the child tax credit. Research from the Center on Budget and Policy Priorities indicate that children and families that receive the tax credit do better in school, are likelier to attend college, and can be expected to earn more as adults. For each additional $1,000 increase in annual income over 2 to 5 years, the child's school performance improves on a variety of measures, including testing and test scores. A credit worth about $3,000 during a child's early years may boost that child's achievement by the equivalent of about 2 extra months of schooling. The earned income tax credit and the child tax credit together lifted almost 10 million people out of poverty in 2013, including 5 million children. In addition, it made 22 million other people less poor generally.
So this is why we do this presentation. This is why we're trying to get the information out. It's just so critical for our families and our children to be receiving this infusion of cash so that they can really have the benefit of these long-term outcomes.
So there are also projected benefits to the expansion that happens in 2020 or has happened in 2021. The expansion of the child tax credit and the American Rescue Plan is projected to reduce the child poverty level in America by 56%, and which is insane, very, very crazy. My background is in the social sciences, and it is very rare to have one single policy make all of this change. And the reductions in child poverty would be significant for Black, Hispanic, and Native American children, even more significant than what we've outlined.
We just wanted to share a little bit of research on what we've found that families actually use the money for. And it turns out that families use the money for basic living expenses for the most part, and also saving for emergencies and contributing to college funds. So most of the money goes towards housing, food, utilities, clothing, and essentials for children, and more and better quality foods for family. And then the rest of it goes for saving for emergencies and contributing to college funds. And I suppose, you know, it's just interesting to see kind of how families spend this, but so we added this slide in. And there are also long-term benefits for not only the children, but also for moms, especially pregnant women. It's been shown that this infusion of cash during tax season actually helps with maternal and infant health, believe it or not. And there have been improvements in infant health indicators such as birth weight, and they've been shown to have a reduction in premature births. Also better, we talked a little bit about this in an earlier slide, but better performance in school, greater college enrollment, increased work earnings in the next generation. So children who are in families that are receiving this child tax credit and earned income tax credit, for each $3,000 a year in added income that the child in a working family, poor family receives before age 6, they work an average of 135 hours more between the ages of 25 and 37. So increased employment and also an increase in earnings of 17%. In addition, and if you think about it, it kind of makes sense with this increase in education, increase in work opportunity, and increase in earnings, that person ultimately, when they retire, is going to have a better Social Security retirement benefit because they've had this increase in earnings their whole life. So from being an infant to being in school, to being in college, to being a working adult, through retirement, this credit is really helping people break that cycle of poverty.
So now kind of to the nuts and bolts of which children qualify for the credit. There are a bunch of tests that you have to pass in order for the child to be eligible. They're not super complicated. They make a little bit of sense, but we'll go through them. The age test, the child has to have been under the age of 17 at the end of the tax year for which you claim credit. So for 2021 and potentially in the future, children under the age of 18 can now be claimed under the American Rescue Plan, like we said earlier. Second, there's a relationship test. The child has to be your own child, a stepchild, or a foster child. Adopted children count as your own children. And also significantly, brothers and sisters count as long as they're your dependent, and their descendants also count. So nieces, nephews, and grandchildren are also eligible, provided they meet the rest of all the other tests. So the next test is kind of named badly. It's called a citizenship test, but like we said, it does not mean that you have to be a citizen to get the credit. It means the child has to be a citizen or a resident of the United States. And they just have to have a valid Social Security number, with the parent having either an ITIN or a Social Security number. The fourth test is residency. The child has to have lived with you for more than half the year. There are exceptions for children, such as like death and divorce, other special circumstances. However, that's the main point. And then the family income test, there is the amount of the credit is reduced the higher your income goes. And Sarah may be able to say more about that. I'm not sure.
Oh, I mean, it doesn't really apply to a lot of our families. There's some cutoffs when you make, you know, I think for married couples over $150,000, but it doesn't necessarily apply to our clients. So.
And then there are two more. The support test, the child cannot have provided more than half for his or her own financial support during the tax year for the credit. And finally, like we've said, you have to claim the child as a dependent on the tax return.
So this goes back to Rosa's question, do you have to file a tax return? Yes, in order to get the child tax credit, it's part of the elements of getting it is you have to be claimed as a dependent on a tax return. So no child tax credit if you're not a dependent on a tax return. And so the advanced child tax credit portion of this changes the credits for 30 million households. And the monthly payments of the advanced child tax credit began in July. This goes back to what the question we answered from Rosa earlier is you can qualify even if you're a non-filer. If you have not had any income or not sufficient income in the past to have ever filed a tax return, that's okay. You can still file this. And you'll just need either a social security number yourself, or if you don't have one, you'll need to get an ITIN. And if you don't have an ITIN, you'll need to apply for one. And we'll talk about a little bit about getting an ITIN, but you'll need to submit the form W-7, and you will also be required to submit, usually the best form of documentation is a foreign passport, and that will be submitted along with your tax return. And instead of filing electronically, what you'll do is you'll compile a paper tax return with the form W-7 with your original documentation, and you will mail that to the IRS. They will process the W-7, give you an ITIN, process your tax return, and then you'll start getting the child tax credit after that. There is a tool on the White House website. I've linked it here. It's still up and running. It should be up and running all the way through November 15th. There's also a non-filer portal on the IRS website. So so basically what the non-filer portal is, it's an easy, simplified tax return. So if you're not used to getting your taxes done, if you've never earned enough money to have to file a tax return, and you're a little bit nervous about how to get that done, these portals kind of walk you through the steps. And it is essentially a tax return that you're filing when you're doing the non-filer portal. That's true of the stimulus checks too. We had a lot of families not understand that when they were applying for the stimulus checks through the non-filer portal, they were actually submitting a tax return. So the IRS doesn't necessarily make that super clear, but that is your tax return when you fill out the information in the non-filer portal. And so far they're saying that November 15th is the deadline to get the 2020 tax return done so that you can receive the advance payments. However, they do say that the deadline is November 15th, but keep checking as they frequently have been known to extend deadlines. If the portal does close, you can still file a regular tax return. And then you can also file a tax return in 2021, when 2022. So basically when we get to 2022, from about January to April is when you'll be filing your 2021 tax return. And that will allow you to get the child tax credit that way. And this is just a screenshot of what the non-filer portal looks like on the website. There's a bunch of different languages, including Spanish and Vietnamese and Russian. So this will help you navigate getting your tax return done. Also, we've gotten a lot of questions about, well, what do you do if you start receiving these payments, but you know you're not entitled to these payments, or your child moves out of your home, or your child goes into foster care, or you're a foster parent, but the child goes back with their parents and you want to update information, or you've changed bank accounts or you've changed addresses. What do you do? There is an update portal. So anytime your information is changing and you want to either unenroll for advance payments or check to see if you're actually enrolled, or update your bank account information or your mailing address, or view the payments that you're supposed to have already received, you can do that at this update portal. And here's a screenshot of what the update portal looks like. And again, they have it in all different languages. So it's very useful.
So just in recap, we wanted to hit our main points. The child tax credit has been significantly expanded by the House of Representatives COVID-19 relief package, including temporary increases to the child tax credit. It increases, the amount has gone up to $3,000 for ages 6 to 17 and $3,600 for children under 6. 17-year-olds are included for the first time. As we said earlier, for individuals earning more than $75,000 or $150,000 if married, filing jointly, are not eligible, it begins to phase out. However, families that are ineligible for the $3,000 credit due to those higher incomes can still claim the $2,000 per child credit. And as Sarah was just saying, the credit can be made payable in monthly installments between $250 and $300.
One thing I just wanted to point out is that if you do go through the portal or file a tax return now, the payments will be increased to make up. So they won't just send you $250 to $300. They'll actually give you an increased payments to kind of make up for the fact that you haven't been receiving them since July. So we still have some time. It's only November 5th. We can do this. Let's get our families enrolled. Let's get them this money.
And we also wanted to talk about the future changes to the child tax credit. It's a very, very kind of complicated situation because they're constantly negotiating it or Congress is constantly debating continuing the advanced child tax credit. There are current propositions that have suggested extending the child tax credit to 2025. However, like we said, it's still a debate. I checked last night and it is still included in the major social spending bill. But again, it's always a dynamic situation. Some suggest the credit could be extended one more year until 2023. And like I said, we simply kind of have to wait and see how it plays out with negotiations in Congress. However, what we can say is that it's a very, very popular policy and there are lots of people that are fighting for it in Congress.
Yeah, one thing I did want to say though, the last I heard is that Senator Manchin, who apparently has a bunch of power in how this bill is going to look, does not like the fact that the current child tax credit has a 0 earnings requirement. So that may go away. It may go back to like $1,000 or $2,500. Who knows what it will go to, but that 0 earnings requirement may go away, unfortunately, because of one senator. But yeah, it's kind of frustrating because I do feel like people that have 0 income or can't work on Social Security, whatever the situation is, they're the ones that actually need the most help in order to help their kiddos. So it's a frustrating situation. Hopefully he'll get his mind changed because like John said, there really is a ton of support for this. I think people are really seeing how powerful of a credit this is. And so we're hoping that it does get, I guess I'm not supposed to really have opinions on this, but I do, so I'll share them. I really do hope that this gets extended for the sake of our kids and getting them out of poverty.
In conclusion, child tax credit is a powerful anti-poverty tool. It has been proven to substantially benefit families. To claim the child tax credit, you have to file a tax return and the child must meet the requirements that are listed a few slides back. And legislation to reform and update the tax credit in 2021 may mean that all of this information is kind of changes a little bit. However, it also may mean that the credit will become even more impactful and broad reaching in the lives of American families.
So there are some resources here. There are 2 clinics in the state of Oregon our clinic, Lewis and Clark Low Income Taxpayer Clinic, and then also Legal Aid Services of Oregon. They are also presenting, I believe, tomorrow, and they have a different presentation on the farm worker program later this afternoon. They're a huge partner. They also have a clinic, so they you can refer clients to them as well. I see Anna here. There she is. Hi, Anna.
Yeah, hello, I'm here as well, listening in and learning like everyone else, Sarah.
So she is our contact at Legal Aid and can help us, refer clients. So, and then the clinics are not normally, there have been some exceptions for stimulus payments, but not normally able to prepare tax returns, just regular tax returns. The clinics need to have a tax controversy, and the preparation of the return must it be intended to resolve that controversy. So if it's just straight up like, oh, I need a tax return done to get the child tax credit, the clinics really can't help in that situation. So we do refer those people to Cash Oregon, where they can get free tax prep services year after year. There's a website, it's fantastic. It's not fantastic right now because they're actually not open right now, but during tax season, it's fantastic. So they have a search tool where you can put in the zip code of where your client lives or your family lives, and it will show the free tax prep sites in the area, what the rules are, what the hours of operation, whether you have to make an appointment or if it's first come, first serve, what languages they have available. The two main ones in the Portland area are the one at the Lloyd Center and then the other one in the Beaverton Municipal Center. So those are the two big ones in this area. But like I said, they have them all over the state. So it's a great service. And that's it. Do we have other questions? We're done early.
So thank you, Sarah and John, and I'm going to open it up to questions in just a minute, but I wanted to add into the chat a couple of resources from another training on the child tax credit. For those of you who are present and are thinking of that November 15th deadline, and you're thinking about hosting events with parents or helping a relative, or you yourself are interested in this, there is a nonprofit organization that has a website called getctc.org. And they have a lot of really useful tips, and they can kind of guide you through the process. And just a moment, I'm going to copy another link. And for Spanish speakers, there is a YouTube video. That one didn't, neither one of those came as a link. I'll get them in a minute as a link, but that video has a step-by-step guide you through how to go from your cell phone and walk yourself through it. So if you are doing trainings for parents, it's a great, like you could use that, present that and guide parents through using that video. So I'll turn the questions over to Sarah and John and get active links for those two resources. We have a little under 10 minutes for questions if there's more. And there is a comment in the chat that says, it's hard for divorced parents when one has sole custody and the children will live with that parent, while the other parent that doesn't have custody gets the tax benefits, because the judge issued on the divorce decree that the other parent should be able to claim the children. So I don't know if you have comments on that, Sarah and John.
Yeah, that one is a tough one. I have clients right now who the divorce decree says one parent claims them in even years and the other parent claims them in odd years. So the one spouse claimed for 2020 and then ended up getting the advanced child tax credit for 2021, whereas my client is the one that's going to be claiming the child for 2021, and I still don't know how that's going to play out. I think that she's going to be able to get it, but there will be an audit most likely, and it's possible that the other spouse will have to repay a portion of it, although there are some safe harbor provisions. But the bottom line is, and this is true in any case where somebody else is claiming a child that you think belongs on your tax return, you can always file, you may not be able to file that return electronically because it'll spit it back saying somebody else has already used the social security number, but you can always file a paper return. So print out that return, sign it, date it, and send it to the IRS. The IRS will process it and will do an audit, and they will make the determination as to who can claim that child. So there's still a chance, like, don't feel like, oh man, it's over, I can never get this credit. There's still a chance. You just need to go through a process that will take a little longer and have the IRS make the determination. If that does happen, we are here to help. That would be considered a controversy. So we would be able to help navigate that for clients. Any other questions? I saw Ophelia, you came on the camera. Did you have a question? Oh, you're muted.
I do. I have a question for a families I know. They've been divorced, and then they share the custody of the child, but the tax when they has to do that every year. The question one of the mother asked me this: next year will be her husband. I mean, ex-husband. And this year was hers. She been filed the tax return from 2020. So now she's still getting this child tax credit. And then she doesn't know what is going to happen when her ex-husband, file the tax next January or February, if she already having this child tax credit since July until December probably. So that's what I'm talking about. What is it?
Yeah, what I think will happen is if the husband files a 2021 return and puts the children on the 2021 return, and it looks like he qualifies for the child tax credit for 2021, he will get that child tax credit. The question I don't know is what will happen to your client. It's possible that she may have to repay a portion of that if she doesn't claim those children in 2021. Although, like I mentioned, there are safe harbor provisions that prevent collection of overpayments for certain low income and middle income families. So it's possible that she may not have to pay back any of it. But that update portal, if she wants to, let's see, where is that? The update portal, if she knows that she won't get the child tax credit in 2021, she may want to come in here and unenroll from those payments so that she doesn't get into any issues. But we'll know more. I'm not exactly sure how it's going to play out. I feel like I need to see how the IRS is going to treat this before I can give solid advice. But if your client knows that she's not going to claim that child tax credit in 2021, she may want to come to this site and unenroll from the advance payments.
Yeah. All right. I'm going to tell her that because she's very worried about it because the ex-husband is going to file his, his tax incomes next year, the 2026. So thank you.
Yeah, it's a mess with the divorced parents. It's a mess. The way that the advanced works and switching year after year, it just makes it a disaster. So I don't know how it's going to work out.
Yeah. Well, if I give her your number,
Yes, have her give us a call if she has issues, for sure.
Do you charge anything or?
No. Our
Okay.
services are free. We don't charge anyone anything. The only problem that we have is that we've been inundated. So our wait list is a bit long. We do screenings right away. So we'll let you know if you qualify for our services and maybe give you some brief advice over the phone. But in terms of getting full representation, it can take several months sometimes. And that's the only sad part about our services is that we have a wait list.
Okay, thank you. Thank you, Sarah.
You're welcome.
So we have about 5 more minutes if there are any more questions or comments.
Anyone else? Well, feel free to reach out to us. We do have, this is the email address. It goes directly to the students and myself. We read it every day. So if you have questions, definitely send us emails. You can also give us a call.
All right, I'm going to give just a little bit of waiting space, and then if we have no more questions, we can end our session a little early. But let's just take about 1 more minute to see if anybody has questions or comments.
Hi,
before we're done.
Sarah, this is Rosa again.
Yeah.
You know what, I remember there was a comment about a family that they told me, we don't want to do that because we don't want to get that tax credit right now because I know we're going to have to pay it back. What if our income increase for 21? Is that correct? That they have to pay that money back, or?
It's
How's that play?
possible if their income is over $75,000 per year for single, or $150,000 per year for married filing jointly. But other than that, they won't have to pay it back.
That makes sense. I will let her know that, yeah, just to,
Yeah. And then the other thing is that even if you exceed those limits, it's kind of a gradual decrease. I think if you get up to 150 for married filing jointly and you go over that, they reduce it down. Like the next step is 2,000, and then the next step, you know, so on and so forth. And if you're only receiving half of it in advance, you may only have to pay back 1,500. But anyway, if that would be the worst case scenario, so you'd have to pay back 1,500.
so I guess it's better to save those checks if she's receiving them just in case, correct?
No.
Do they have a certain time do they expire?
Well, yeah, I think checks expire after 6 months. My recommendation is just cash those checks and spend it on your kids. That's what the money is for. Spend it for their food, housing, health, etc. Use that money. Unless she's going to win the lottery and make $1 million, I think we're okay.
Then she can be my best friend.
Exactly. Mine too.
Thank you.
I think the advice to people is spend the money. I think it's going to be a very rare situation in which somebody has to pay something back. I think you're going to have to make a lot of extra money in order for that to happen.
All right, we'll take a little bit more space, and then if there's no more questions, we can end the session and have a slightly longer break before the next one. So any more questions or comments before we end the session?
Thank you very much for wonderful information. Have a great
Thank you very
afternoon.
much for your wonderful questions.
Bye-bye.
Bye, everyone. Thank
Bye.
you.
Thank you, Sarah. Thank you, John. And for everyone else, the next session starts at 1:30. So we'll be ending this session and then you can join the next link.
Thank you.
Thank you.